Let's get a check on markets now. About 7 minutes after the open of trading on this Thursday morning. Jared Blickery is on the floor of the New York Stock Exchange looking at some of the selling action this morning, Jared.
Yes, the markets narrowly escaped disaster yesterday, and it looks like they're trying to price it in today with that hot PPI number. I have a number of thoughts on that, but let's get to the markets on the Wi-Fi Interactive. It's shaping up to be the worst week in about a month here, and let's check out the 4-day price action. You can see the NASDAQ down nearly 5%, and we still got basically 2 trading days left in the week. Now, I want to check out our S&P 500 2-month chart that I've been tracking here. We have been in a big trading range for about 3 weeks, and we are heading back down to the lower end of that. If we break through, I don't have much confidence that these lows near 3,600 are simply going to hold. And the reason I say that is because just taking a look at the MOVE index, now this is like the VIX of bonds. This is extremely elevated. I'm going to put a 3-year chart so you can see the pandemic high. We have been trending higher for a long time, and we could very well take out these highs here. It's going to be very difficult for equities to get off the ground if we're seeing this bond market volatility. And we're seeing more action in the 10-year T-note yield. Let's see if we can get that up there. We can see that's up another 9 basis points today. And these sound like small numbers, 0.09%, but it's important to realize that these are tied to heavily levered trades, and they do mean a lot to the market. Well, it looks like my Wi-Fi Interactive signal is a little bit slow here. One more chart. I think I can get you the 13-week T-bill yield, and that has been screaming higher as well. This tracks what the Fed is actually doing with the short end of the curve. So all in all, not looking very bright on all of these time frames. Now, let's get inside the market. You're going to see a lot of red on our heat maps here. Wasn't able to find any sector or any style that's really in the green. You can see Costco there at the top. That's standing out. That is a consumer staple, so I guess nice to see that. But let's take a look at our sector action for the day. Everything in the red. You can see energy down 3.5%. Crude oil now crashing to 95. Could easily go to 85. And this kind of ties back to the PPI number that we got this morning. Now, Brian, I know you're excited about crashing egg costs. Usually that would filter through to the consumer in 1 to 2 quarters. However, I've been reading some analyses that say that might not happen this time because I guess the companies that make these products, and let's say for eggs, this is going to be a baking company, Nabisco, who knows? They're not necessarily going to lower their prices because they have been shell-shocked by price inflation just the same way as consumers are. So you may see margins getting better over the coming quarters because of the commodity crash, and I do expect these PPI numbers to come down, but unfortunately, it may not necessarily reach the consumer just yet.
I saw what you did there. You worked in eggs and shell-shocked. Shell. I like that, Jared. Real quick, before I let you go,
thank you.
Your early read on these bank earnings. Big misses.
Big misses, not a surprise though. We were expecting, the bar was already low, so the fact that we're already exceeding that low, I don't think is too much of a surprise. There was so much volatility. Nobody can model a lot of these businesses because of the chaos in the market. So I think earnings estimates are just going to crash this quarter, and we're just seeing the beginning of this. We saw this start about 2 weeks ago. There's a long way for this to go. So I think this is going to play out over the earnings season, probably going to be in for some nasty surprises here, Brian.
All right, Jared Blickery, thanks so much.